All right. Hello, everyone, and welcome to today's webinar, Everything You Must Know for Your Business to Survive, SBA Loans, Negotiating with Your Landlord, and more. I would like to first congratulate you all for making time for this today when so many other business owners would not. From what I've seen over the past few weeks, there are really two types of business owners. There are the ones that are completely giving up and surrendering and procrastinating and hiding in the corner. And then there are the ones who are grabbing the bull by the horns and taking action to save their business and their future. And really everyone on this call is by definition in that second group. So again, congrats on being here. For those of you who don't know me, my name is Paul Abraham. I am the CEO of PGI Law, a law firm here in Fairfax, Virginia. And we practice in the areas of business law, as well as estate planning, in other words, wills and trusts and medical directives and such. And joining me is Raymond Goodrich, who is the Executive Vice President and Chief Lending Officer at the Bank of Charlestown. And although it's called the Bank of Charlestown, they have branches here in Northern Virginia. Now, I've known Raymond for over 20 years, probably, and when I founded this law firm 10 years ago, he was my go-to for all our banking and lending needs, and he's been excellent. He knows small businesses in and out, and I like to refer to him as the Dr. Fauci of SBA loans. So welcome, Raymond.
Thank you, Paul. Very generous with your comments, and a very good morning to all those who have joined us. Look forward to this seminar.
Excellent. So because you guys are on a webinar with a lawyer and a banker, we would be remiss if we don't put you through a disclaimer page. But essentially, look, this is, I mean, just take the legalese out of it. This is not legal advice. It's not formal lending advice. It's just for this webinar and just to give you general information. We all know that the whole stimulus thing is a complete mess and disaster, and not even the SBA knows what's going on. But Raymond and I have been at the forefront of this, trying to get the best information and the most updated information as possible. It's entirely possible that it's still not going to be entirely up to date and correct, just because things are changing literally by the hour, okay? So as long as you understand that, I think, and you're happy with that, that's fine, and we'll be in good shape. So, just, I mean, you can take a second to read this, or just understand that please do not consume this information if you're pregnant or nursing, and we'll be good to go. All right. So first of all, keep it together. Okay. We're going to start by giving you some practical legal advice for surviving the next couple of months. Then we're going to get deep into different types of SBA loans and what you might qualify for. And then we're going to do some Q&A. Okay, now for the Q&A, I would ask that you use the Q&A function on this Zoom webinar, and then we'll get through as many questions as we can. So again, first step is keep it together. Okay, so look, our attorneys have worked with hundreds and hundreds of businesses in all kinds of industries and professions. Okay, restaurants, schools, doctors, dentists, home care, martial arts, contractors, trades groups, consulting firms, online businesses, retail, grocery stores, you name it. So we've been very, very well situated in observing how owners across all these professions and industries are reacting. And we've seen some commendable reactions, and we've seen some poor ones, okay? First of all, you can't do anything right unless your mindset is right, okay? Here's the deal. For most small businesses, this pandemic has been very bad. Okay, I get it. And for some of you, you were finally doing great, and this was going to be the year. And January and February were awesome, and then this thing hit. Okay, for others, you were already barely making it, and this now seems like the coup de grace. And either way, though, look, you can't help that there's a pandemic. Okay, what you can help is how you deal with it. And I want you to know something. I want you to know that when this thing is over, there's going to be so much pent-up demand for most of you. There's going to be so much work and so much business coming your way that you won't know what to do with it. And only those businesses that survive will get the benefit from that, okay? Only the businesses that have kept it together, kept up their image, kept their operating procedures intact will get to benefit when the work finally comes in. And most importantly, only the businesses that have kept their key people, their teams, that it took them forever to assemble, happy and satisfied and energized, will survive. Okay, so you have to be a leader for your team. Your employees, if you have any, for those, I know some of you don't, but for those of you who have employees, your employees are terrified. They're seeing the unemployment numbers, the people applying for unemployment compensations, and they have no idea what's in your head. You've got to communicate to them that your intention is to come out of this far more successful than you came into it. Because unlike your competition, you're keeping it together. And you've got to energize them if you want them to think positively and bring in business for you and produce better. Look, there are law firms out there laying people off left and right. I've told my own team that I was very clear just right after this thing started, which I define as March 11th. That's when really like things hit the fan, right? I've told them that we have every intention of outlasting every law firm out there, so that when we get through this thing, we can not only bring on the clients that they no longer have the capacity for because they laid off everybody, but we can also hire the superstar employees that they laid off so we can service those clients. And I can tell you my team has been kicking butt, and you've got to do the same for yours. Okay, now obviously you can't promise your team, you can only promise your team that you'll make your best efforts. Okay, you cannot and should not promise them that you'll keep them on, because that's a promise you cannot make, because you just don't know. Okay, but if your intention is to do your absolute best to keep them on, you should tell them that. Okay, because many businesses are not doing that and their teams are terrified. Now I get that some of you have been completely shut down like restaurants, and you guys have already had to lay people off, but look, this also applies to you. Keep in touch with those great employees that you've laid off. Let them know you're situating your business to kick butt when things reopen, and that you'll want them to be a part of that. Okay, now let's talk about now that we have our mindset in place, let's talk about actual practical steps, legal and practical ways to help you with cash flow. Okay, first of all, something very practical, not even legal. Reach out to your vendors. You would not believe what we're seeing with regards to vendors cutting their people a break. But you have to ask. Okay, none of your vendors is going to call you and say, hey, it's a tough time, you don't have to pay this month. No one's going to do that. You have to call them. You have to reach out to them. Okay, and literally what you should do is grab your bank statement, grab your credit card statement, and go down the list of every vendor you're paying money to every month. And I'm talking, this could be your payroll provider, this could be your bookkeeper, this could be just any vendor you have, and talk to them and say, look, I like you, you've been good to me, I've been good to you. Reality is business right now is really bad. You know how it is. What can you do for me? Can you cut me a break? Can we defer some payments? Can you waive late fees? Whatever. We're seeing just some crazy things, and a lot of people are coming out of this with discounts, just permanent discounts, not just temporary. And also do it on the personal side. Call your mortgage institution. Call your credit cards. Credit card companies, some of them are waiving interests. Some of them are waiving minimum payments entirely. It's really, don't be shy. Just do it. They're expecting it, and right now they're still being nice. So now's the time to do that. Okay. And then another note on that, be good to your vendors, okay? If you really can't pay them, call them and tell them, look, I'm not gonna be able to pay you. That's a lot better than just not sending a check. And the reality is, look, many of their own clients are not paying them, okay? So A, try to pay them. B, if you can't, call them, tell them you really care for them, you really value them as a vendor, you just can't pay right now, and work something out with them. They will be good to you in the short term and the long term if you do that with them, okay? And another idea is offer to prepay, if you have the cash, offer to prepay several months worth of expenses at a discount. So what a lot of vendors are doing is a lot of your vendors need cash now. So what some of them are open to doing is giving you, say, 6 months worth of services at the price of 4 months worth of subscription. So call them and say, look, if I prepay for 4 months worth, can I get 6 months worth of stuff? Or, whatever the equivalent is for your vendor. Because a lot of them will value the cash right now, okay? So that's ideas for vendors. Now, as far as business interruption insurance, so look, this is a big deal right now. There's a huge debate. Obviously, insurers are saying that business interruption insurance doesn't, that's not something you can take advantage of in light of the coronavirus situation. And a lot of lawyers are begging to differ. I think it does depend on your policy. I think it depends on what's in there. So look at your commercial insurance, look at the insurance you have, bring your policy to an attorney and go over it. It's very possible that if your business was interrupted because of the coronavirus, the language in your policy could potentially be interpreted to make it so that your insurance company has to compensate you. We don't know, it will depend on your policy, but take a look at that, okay? Don't ignore that. And third thing, this is a big one for those of you who have landlords. I know not all of you are commercial tenants, but many of you are. And by the way, we've actually got at least a couple of landlords in the audience. And I know that, and they may not like to hear what I'm about to say, but what I'm about to say is just facts. And they will actually benefit a lot from what I'm about to say, because if their own tenants have good business lawyers, then their own tenants are getting very similar advice to what I'm about to give you now. So everyone, ears perked. Landlords are in huge trouble, okay? A lot of them are small businesses themselves, but whether or not they're small businesses, they're in big, big, big trouble. And you have to go into this just understanding that, okay? Because you're not the only tenant having a problem paying them. So think about it this way, though, that's on one hand, right? On the other hand, in some cases, they have no choice but to give you a break. So let's say they've got 20 units, right? And 8 of those units are tenants that can't pay. What your landlord doesn't want is 8 vacant spaces, because they're going to have a hard time filling those spaces, especially with this downturn in the economy. And second, that's going to reduce traffic for the other 12 tenants, and now the other 12 tenants want to leave, okay? So you should know that your landlords want to keep you insofar as it's possible, right? At the same time, they're not going to roll over for you, okay? They're not that desperate. They're not just going to let you ignore them and not do anything about it. So you got to strike the right balance, okay? So here's what you can actually do. If you cannot afford your rent, approach them, okay? Generally speaking, for most landlords, there are exceptions, but for most landlords, they will treat you a lot better in both the short term and the long term if you approach them rather than just not send them a check. Okay, tell them you want to work something out. Okay, some possibilities for working something out include what we've seen landlords deferring rent to the end of the lease. So they'll say, look, okay, you don't have to, instead of paying April and May and June now, you don't have to pay that now, and we're just going to add those 3 payments at the back end of your lease, okay? So that could be a great solution for you. Another solution is they're actually giving reductions. Some of them are saying, okay, you can pay 50% for the next 3 months or whatever. I mean, it varies, obviously. But again, if you don't ask, you're not going to get that. So if you can't pay your rent, approach them, talk to them, and see what they said. Now, if the landlord isn't cooperative, consider banding together with other tenants in similar situations to yours. This could especially work for places like strip malls, but other types of commercial spaces can do this too. It will give you more leverage. I mean, we've seen groups of tenants come to us, which helps because, well, A, they can divide their legal fees amongst themselves, and B, landlords tend to take lawyers more seriously when it comes to negotiations. So that's just another idea if your landlord's not working something out with your director. And if that fails, grab your lease, and honestly, you probably shouldn't wait to that point, but either way, grab your lease, have a lawyer review your lease, okay? Because every lease is different, but many of them have clauses that could help you out in a situation like this. It's funny, for years we've had people say, oh, why are commercial leases 30, 40 pages long? And what's with all this useless boilerplate? Well, this is a situation where the boilerplate can actually make a huge difference. Okay, your lease could have something that we call a force majeure clause, or an act of God clause, and that basically says, look, if there are riots or nuclear attacks or whatever, you're kind of off the hook. It doesn't say the words coronavirus in there, but depending on how it's worded, it could certainly be used potentially in a situation like this to, maybe give you leverage in negotiating with your landlord, right? And there could be other provisions. Some people have, some businesses have provisions in their lease that says, look, you, the landlord, are required to make sure that a certain number of other tenants in this mall or in this building remain open, and you're not doing that. So you're not keeping up your end of the deal. So there are different solutions, with regards to landlords. Okay, so let's now let's get into SBA loans. And Raymond and I have identified 6 available solutions, and I'm going to let Raymond go ahead and tackle the first one.
Absolutely. Thank you, Paul. And again, good afternoon to all the attendees. As Paul mentioned in earlier remarks, I think the first thing that one should do is reach out to your banker, because you want to let the banker know the status of your business. And in particular, you should discuss what are you going to do in the next 30, 60, 90 days for the plan of business. Like we said, some restaurants are closed and they have takeout, so their revenues may have dropped by 80%. In other cases, like hotels, where one had occupancy of, say, 90%, and one of our clients here, the occupancy dropped in 3 weeks to 6%. So it's important to give your banker information, because then the outcome that you want is you ask for a modification of your existing loan. And there are a variety of programs and options based on how your business has been impacted. But I can tell you today that bankers are willing to listen. We're willing to be flexible. In particular, the federal government has allowed us far more leeway in working with borrowers, given these very crazy times, to modify your loan. Paul, back over to you.
Absolutely. So I'm actually going to tackle 2 and 3 together, okay? SBA emergency injury disaster loans and SBA emergency economic injury grants, okay? So I'm going to start with the first one. So the EIDL, we pronounce it EIDL or EIDL, and I'm going to tell you, first of all, who can apply, okay? So look, there are different types and exceptions, but I'm going to tailor the list to make it relevant to people in this audience, okay? So boiling it down to what matters to people in this audience, you can apply if A, you're a business with 500 employees or less, B, you're an individual who operates under a sole proprietorship with or without employees, or as an independent contractor, and then C, private nonprofit can also apply, okay? Now, that's the type of organization and the size. Now, that's not enough, okay? A lot of people have been giving bad advice and saying that all you need to do is be a small business and you apply. That's not enough, okay? You need to apply for the loan. You need to have suffered a substantial economic injury as a result of the coronavirus situation, okay? That generally means a decrease in income from operations or working capital, with the result that your business is unable to meet its obligations and pay its normal operating expenses in a normal course of business, okay? So you're gonna have to establish that the economic injury is substantial and that it's a direct result of the disaster. Now, are there specific magical numbers and formulas for this? No, but that's exactly why we have to look at these on a case-by-case basis, okay? Now, let me tell you about the type of loan, the application process, and what you could potentially get out of this, okay? So the maximum loan size for the EIDL is $2 million, okay? For most small businesses, it's gonna be a lot less, but that's the maximum. If you get the loan, the interest rate would be 3.75%, which is very low as far as business loans go. And the term could be up to 30 years, which is a super, like your grandchildren could be paying this off, okay? If they give you the full 30 years. Now, the good news is, and well, another piece of good news is that if you get this loan, the first payment is due 1 year after the loan origination date. So you don't have to start paying it immediately. Now to apply, you know, you don't need to have finished your 2019 taxes. I know that was the question that a lot of people are asking. But look, they may check your credit report, they may check previous tax returns, and use a combination of these things to make a decision, okay? So your credit may make a difference here. Now, for loans under $200,000, there's no personal guarantee required, okay? So if you got a $100,000 loan or $50,000 loan or whatever, they're not gonna ask you to personally guarantee it. For loans, if you get a loan over $200,000, then they might require you to guarantee it personally, but they're still not going to ask you to put a lien on your house or on any real estate you own. And these are important distinctions because normal disaster loans are usually personally guaranteed no matter what. And some of these restrictions have been waived here to make this loan even more favorable than a normal disaster loan, okay? Now, any funds received, you have to be very, very careful about how you use it, okay? And you have to get professional guidance on using those funds, okay? You can use them to pay fixed debts, payroll, accounts payable, and other operating expenses that can't be paid because of the disaster's impact. But you can't, there are certain things you cannot do, okay? You can't just like keep the money or spend it on on expanding your business or something like that, okay? And the penalty for misusing disaster funds is immediate repayment at 1.5 times the original amount of the loan. So, okay, it's pretty drastic, okay? So, you get in trouble if you apply improperly. If you don't qualify and you apply, that could be problematic. You could get in trouble. And you can also get in trouble if you do get the funds, but you misuse them, okay? That's why I'm so annoyed with all the advice out there from accountants and lawyers and notarios that every business should blindly apply and get free money so you can pocket it and you know, use it for whatever, okay? What they're doing is they're putting people in serious danger. So don't try to do it with professional guidance, okay? Just don't. We've had businesses come to us about this, and many of them were providing our assistance with their applications because they qualify. But others, we've told them, look, no, based on your situation, we can't do it for you, and you shouldn't either, because I mean, you could be looking at fraud, okay? So get that assessment, okay? Now, how and when do you get the money? We don't know how long it's going to take the SBA to start, well, to start asking for supplemental information, because it's entirely possible that right now the application is not horrible. It's a little bit complex, but it's not terrible. But later on, we expect that the SBA might be asking for supplemental information to see whether you qualify for this loan. Okay, so we don't know when that's going to start, and we don't know exactly when the loans are going to be funded. You know, they probably had hoped and envisioned that it would be a couple weeks or something, but at this point, I mean, I hate to guesstimate, and I don't know if Raymond has an opinion, but I think probably I wouldn't expect anything before 1 to 2 months, but that's just me, okay? Which takes us to the next item, which is the emergency grant, okay? So the SBA has, or the law really has accounted for the fact that when you apply, it's going to be a while before you might get the actual loan. So they've included something called the emergency grant, okay? So when applying for the EIDL, you also have the option to ask for this grant if you certify that you're eligible for the EIDL, okay, for the loan, which we've established how you're eligible for it, okay? So this grant is a $10,000 grant that you're supposed to receive within 3 days. I don't think they're living up to that right now. I know, you know, there are businesses that applied more than 3 days ago and they have not received the $10,000, but that's what it's supposed to be. We're hoping it'll be a matter of days, not weeks, not months, but we'll see. Now, this advance payment, you also have to be careful how you use it. Okay, you can't be like, oh, 10,000 bucks, great, I'm gonna buy a giant dollhouse. Now, this advance payment, it can be used for providing paid sick leave, maintaining payroll, meeting increased costs to obtain materials in light of the disaster, making rent or mortgage payments, and repaying obligations that cannot be met due to revenue losses. So you have to be careful on how to use that. And by the way, we're going to get into this a little bit more, but because of these restrictions and because of the potential inability to double dip with regards to this loan and the PPP, which Raymond will talk about shortly, I am, recommending that our clients open up separate bank accounts. At this point, I am saying one account for the 10,000, another account for the EIDL loan if you get one, and another account for the PPP funds, at least until there's more clarity. But even when there is more clarity, it's going to be a lot easier for you to show what you spent on what, because if you're using all these funds for the same purposes, you're going to be unable to double dip, and they're going to want you to do something about that, like refinance or pay it back or whatever. So now here's the beauty of the $10,000. Even if you get denied for the larger EIDL loan, you get to keep the $10,000 and you don't have to pay it back. So it is free money, literally. But again, you have to qualify for it and you have to use it correctly. Okay? So that's EIDL and that's the emergency grant. So now we're going to get into the next few items, and I'm going to give it back to Raymond here.
Yeah, Paul, thanks so much. So the fourth solution available to small business owners is the SBA Express Bridge Loan. So in other words, as you can imagine, all the small businesses and nonprofits and sole proprietors are applying for assistance, not only that which Paul described a few moments ago, but also the other financing options we're going to be talking about in short order. So the volume is huge. They've deputized all the banks in the United States to work on this. It's all hands on deck. But in the meantime, if you are needing access to capital, you can apply for an express bridge loan, an EBL, through your bank, provided they are in a preferred lender. So when you talk to your banker about the concession, I would recommend asking them, hey, banker, are you also an SBA preferred lender? And so you can get up to $25,000 in very quick turnaround time that then can be paid off by our other loans we'll be talking about. The fifth option, if you have an existing loan, and this is some excellent news that was recently announced by the SBA, and I mean recently, to Paul's point, how things are changing. It was announced Wednesday at about 2 o'clock, which was yesterday. For those of you who may have an SBA loan on the books now, you get complete payment relief for 6 months of principal and interest paid by the SBA. So that is a peace of mind that can help you focus on what your next steps are over the next 30, 60, or 90 days. So those are the two options, and that's obviously available from your current bank. So when you talk to the banker, if you have an SBA loan, you get relief. If you need some quick capital, you can get the bridge loan and get concessions on the other non-SBA loans that you have. And then Paul, next slide, please. And then we get to the big one of it all. As you all heard, Congress passed the $2.2 trillion CARES Act, the Corona Aid Relief and Economic Security Act. And underneath the section today we're going to be talking about is Title I, because I think there are about 7 or 8 titles, but I'll leave that up to Paul to maybe amplify if needed, is the Paycheck Protection Program, the PPP as it's affectionately called. And for that, there are, and sorry to be so detailed, but let's follow very closely the information that's on the slide. So first off, the covered period. In other words, what is this loan going to cover? And so the covered period is designed to be the 8 weeks after your initial application, the date of application. So you can use those proceeds for those eligible expenses during that window of 8 weeks. The covered cost, in other words, how do you arrive at the loan amount? So the definition of covered cost will be your average 12 months. And by the way, that has changed too. It's the 12 months of 2019. So January of 2019 to December 2019, sum up all those payroll costs, divide by 12, that'll be your monthly average. And the payroll costs are defined as gross payroll, vacation, sick leave, overtime. You can include retirement benefits. You can include health care insurance and some payroll taxes. You'll arrive at the average monthly, and you take that number and multiply it by 2.5 times. So for instance, if your average monthly, for instance, is $10,000, the sum of all of that, then you can get a loan up to $25,000, 2.5 times. And the monthly average still hasn't been defined, but I expect it to be what all of us on this call consider the average, but that could change too. Next slide. Therefore, the maximum loan amount is 2.5 times the average monthly payroll, capped at $100,000 per employee. The maximum loan of a business can be $10 million per borrower. To be eligible for that, the eligible borrower is less than 500 employees and the SBA size standard. And we provided you the website. If you're uncertain about your size standard, you can go to that SBA website, put in your NAICS code, North American Industry Classification Code, and they will tell you what the revenues have to be for your company. Use of proceeds, in other words, once you have the loan, as Paul said, it is critical that you use the proceeds of that loan only for these categories, which are payroll expenses, employee salaries, mortgage interest, excluding the principal that you pay on your loan, rent, and utilities. Say you use it, like Paul said in the example, to expand the business, you want to buy inventory. That expense on inventory is going to be excluded from the forgiveness calculation. The good news is that lastly is the loan covenant. In other words, no collateral is required and no personal guarantees, and the no credit elsewhere test. In other words, can you get this loan anywhere else? And that's been excluded. So in all probability, all small businesses will qualify provided that can prove and certify that they have been economically injured. And the best example of that would be hotels and restaurants. Next slide. All right, so now we get to the forgiveness. So let's say you've applied, you've provided your banker with the facts to compute the amount of the loan. You're at the end of the 8-week covered period. The small business needs to reapply with the same bank that issued the loan, and you need to provide the receipts to prove the use of funds. And the forgiveness is up to 100% of the amount of the covered expenses. So in other words, if you've used that money, the $25,000 in that example, for payroll, rent, utilities, interest on the mortgage, the forgiveness will be 100% of that amount. If you don't, then there'll be a declining portion will be reduced and it'll convert to a loan. So before we move to the next slide, let me give you another example. It would be, say before February 15th, the business had 10 employees. And after February 15th, you had 5 employees. You need to make sure that you have the same number of employees before the 15th of February as you do during the loan period. So you have to hire them back, and that'll be totally forgiven. Next slide, Paul. Over to you.
Yeah, okay, excellent. So we want to make sure we leave enough time for Q&A, so we're going to start doing that now. But before we start that, please see our contact information below if you want to contact either of us. You know, you've got emails, phone numbers. So, you know, in case you have to get off early or whatnot, you have it right there. Raymond, thank you so much. That was excellent. And, you know, I think a lot of people have been hearing a little bit about the EIDL and a little bit about the PPP, but no one's talking about the SBA bridge loans. No one's talking about reaching out to your bank about your existing loans and renegotiating those. And no one's talking about the small business debt relief program. So thank you for covering those, because everyone's just thinking there are just two options out there, and there's a lot more than that. So let me let me see, I have a couple questions in the queue already. Okay, so first question is, if you feel that your landlord has been historically non-cooperative, and you feel this would be no different in this case, should the tenant skip the personal approach and try to band with fellow tenants? Look, the answer is really not technically a legal answer, but it's really kind of a practical, just a practical answer, which is, look, if you don't have a great relationship with your landlord and you've tried reaching out in the past and they're not cooperative, can you go straight to banding with your fellow tenants? Absolutely. I mean, there's nothing requiring you to do it either way, legally speaking. It's just a matter of strategy. The banding together strategy has worked well in a lot of cases that I've seen. Look, but I can't promise you anything. I mean, theoretically, you could have like a, just a situation where a landlord might be set off by all the tenants banding together, and might pick on the ringleader or whatever. But no, but I think realistically, in most cases, absolutely, you could band with fellow tenants and approach the landlord. Now, you don't have to do it in a negative way. It's not like, hey, it's not like you're all showing up with pitchforks and torches outside the landlord's house. Like, no, like you guys band together, you get a representative, typically an attorney, to communicate on your behalf, and we reach out to the landlord in a very nice and professional manner. Like, look, we all want to benefit, right? We, the tenants, want to have good business. We want to bring in money. We want you to benefit as our landlord, because you provide us our space. We love our space. This is where we make money. Let's work together cooperatively. We're not trying to get out. We're not trying to take advantage of the situation. We're not trying to get out of our obligations. We're just being realistic right now. Money's not coming in right now. What can we do to keep ourselves in business and to keep you in business? So the answer is yes, you can try to band with fellow tenants right now. You don't have to wait. So I think the next question is, Raymond, do you wanna tackle the next question, or any of the questions that are applicable to you here?
Yeah, I really appreciate the audience. These are some awesome questions. My gosh, let me see. I'm drinking a little bit from a fire hose, so let me try to get through them real quickly. Starting with the first loan, absolutely, you are correct. There is a salary cap of 100,000 computation. So let's say you have an employee who earns 125,000, you would exclude any amounts above the 100,000 from those average monthly calculations. That's correct. That cap is still in effect. Second question, the most funding. The interesting thing there is that under the SBA program that Paul was talking about, that determination is made by the SBA. I have not seen any of the mathematical computations in terms of what you would get, other than we know you'll get $10,000 grant, but we don't know the loan amount. So that's a little bit of the secret sauce there. Under the PPP program, you will know exactly what you can get because you'll have that monthly average times 2.5. Now, for the audience, this is still a little bit up in the air, but from what Paul and I, how we read the tea leaves out there, it sounds like you can apply for both. In other words, you can apply for the loans that Paul said, which is the EIDL loan and the grant, and you can apply for the PPP, but do not use the proceeds of those loans or grant for the same purposes. Use it for different purposes, different payroll periods, but it can give you a longer bridge. Excellent question. Yes, on the SBA bridge loan, you're absolutely right. That came out at the last minute, so maybe a little more time on that. The SBA bridge loan program, it allows small businesses who have a relationship with the SBA. So in other words, your current SBA lender Express, as I told you, go to your banker and you can borrow up to $25,000 with very little paperwork. It's quick turnaround time, and then that loan will need to be repaid by the proceeds of the EIDL loan or of the PPP loan. Let's see. How about if I turn it over to you, Paul, and then I'll go through some other questions.
Okay. Sure. So let me tackle a couple of them real quick here. Is one of them is with which loan? The question is, with which loan option can you get the most funding? That is, if you know the answer to that, we will all resign and quit, and then you can take over all of our jobs because we have no idea. We know, I mean, the PPP, look, the PPP is pretty objective. I mean, you can reasonably expect what the amount is that you'll get. The EIDL loan is, look, they're supposed to get, it's a lot vaguer. That's why we don't know the answer. It's supposed to be tied to the extent of your economic injury. So that's why in applying, you have to make sure that whoever's advising you on the application is advocating for you to really demonstrate your economic injury correctly, because the amount of money that you'll get from through the EIDL is going to be dependent on that. Okay, so good question. Which loan option can you get the most funding? I think it depends. In some cases, it'll be one. In other cases, it'll be the other. I think it's going to vary case-by-case basis. But like Raymond's saying, look, if you qualify for both, apply for both. First of all, you don't have to accept, a loan if you don't want it once you're approved. And at that point, you can see, well, like I said, you're going to have different bank accounts. If you accept both loans, you deposit them in different accounts, and then you got to document the heck out of it to make sure that you get the benefits of both. So your question might be moot at that point, so you don't have to choose between them. You can apply for both of them. Okay. Now, the other question another question I see here is, let's see, in regards to, okay, I think this question is from a residential landlord. This is somebody who is a landlord. So in regards to tenant-landlord rent issues, the negotiating comes into effect only if the tenant has been affected by the corona effect, right? Tenants hear on the news that they can hold back on rent but are still employed and still want to negotiate a deal. Is this something you could push back on? Okay, so this is a little bit, kind of specific to residential landlords. And look, tenants don't have a carte blanche to just not pay you. I think the issue is that courts are largely shut down for a lot of things, and one of the things the courts are shut down for is evictions. We've got several landlords right now with non-paying tenants, and some of them who needed to evict their tenants from before this whole thing started, lined up right now, and they're dying to evict, and we can't do it because the courts are not allowing it. But we have it so that they will be first in line, because when the courts open back up, forget about it. It's going to be, there's going to be huge delays because they have to fit all these cases that have been on hold for a couple of months. So we're making it so that they're first in line when the courts open back up. But until now, unfortunately, yeah, you can't do much about evicting non-paying tenants. Raymond, go ahead.
Yeah, thank you, Paul. Let me try to answer a basket of questions here, talking about prove economic injury, and then I'd like to pivot to something that may be complicated, so I apologize if I don't come clear on it, but it's the hourly staff and 1099 employees. That's really a prickly pear. Let me start with prove economic injury. So what we're doing here at our bank to prove economic injury is we're asking an in-house, you can print it off of QuickBooks, an in-house profit and loss, so that we can really see that you've gone from revenues, let's say in December of 2019, and you provide us March's P&L, and we can really see. So that's the first test. And the second thing is you'll have to warrant that that is accurate information. So there'll be a certification on the borrower's part that will also attest to that. But that would be the simplest and the easiest test. Now to something a little more complicated would be hourly staff and 1099. So there are fundamentally three tests for the forgiveness of the PPP loan. The first test is you need to keep the same number of FTEs as defined as full-time equivalents. Now remember, sorry to be redundant, just to be clear, a person who works 40 hours is 1 FTE. A person who works 20 hours is half an FTE. So whatever your FTE count was before the 15th of February needs to be the same as during the covered 8-week period. The second test is you need to maintain for that same group of workers, you should not cut their salary lower than 75% of what they were earning before February 15th. So those two eligibility categories are the big drivers, as we understand it, as this time for the forgiveness of the loan. So in other words, if we were to play this out, you apply for a loan, it's $25,000. You have 10 FTEs before the 15th. You have only 5 FTEs after the 15th of February, that you would only be forgiven 50% of your $25,000 loan. Now, to the 1099, that is a challenge, because the first test is, how do you compute the hours? How do you define an FTE on a 1099? Because you may have a 1099 employee for flat work. In other words, they do a project. You're really not paying them by the hour. So you need to really sit down and calculate, can you calculate and prove in your loan application that this 1099 employee has worked X number of hours, because then that needs to be translated in your employee count. Now, the other thing to be aware of, that we are in a gig economy. We are a world, but we're so tightly wound together. The employee, when you count the employees, they have to be permanent resident alien or U.S. citizen, and they have to reside in the U.S. You cannot have American citizens, expats, working in, let's say, Italy or Germany, doing your work or quote unquote telecommuting. Those don't count. So it's domestic domiciled employee. Paul, would you like to add some more about the 1099? I know that that's still a little bit in flux there. Any insight you can add to what I said?
Yeah, so with regards to the calculation of the average of the preceding 12-month period of your payroll, a lot of people are asking, are we just counting in on W-2s or 1099s? And look, we've seen so much contradictory information from actually reading the act itself, like the law directly, not secondhand sources or secondhand interpretations. The answer scares me a little bit, okay? Because initially what everyone was saying was, yes, no question, independent contractors will count. But and even some SBA reps have been saying that. Now, upon closer reading though, the language kind of scares me, because if you look at the actual act and the part of it that covers the PPP, there's almost no mention of independent contractors. There's one paragraph that does mention them, but the language is so poorly written and ambiguous, and that's what happens when you try to pass a law in 3 days or whatever it was, that it's impossible to interpret in any definitive way. So what I'm advising at this point is, I think there's enough in the law, the way it's written, that you can, in good faith, include the 1099s in your application. Just in good faith and ethically and in reliance on your understanding of the law, you can include those when applying for the loan. But don't be surprised if the SBA later comes back and says, no, we're not going to include them, and we're not going to include that amount in our approval. So I would still include it in the application, but I would not count on that coming in. So let me see. I think we've covered, so a lot of the questions are, were sort of answered by Raymond in the last few minutes. Let me see. Um,
Oh, while you
okay,
look through, I picked one up that could add a little more clarity.
yeah,
I'll
sure, go
just
ahead.
keep it in mind. One of our attendees asked, well, I have one business, but if I have other businesses, can I apply? Absolutely. The business is defined by separate EIN numbers. So if you had 3 separate businesses, you could be doing the same thing. You could be an owner of 3 gas stations. Each gas station could have a separate EIN number, and therefore you are eligible to apply for each separate business. Yes.
Excellent. You know, and I love this one. Will a transcript be available for this webinar? I'm a professional transcriptionist and would do it for the benefit of all of you in need. Thank you for offering that. Please email me at my email below on the screen, and let's definitely talk. Really appreciate you reaching out about that. Let me see. Okay. Let's see. Raymond, we have, okay, can an indirect lender apply, so this is for automotive finance, apply for any of the disaster loans? My initial answer is I don't see why not, as long as the other qualifications are met. There are some exceptions. Remember when I told you earlier, I'm giving you kind of the distilled version of who can apply for the EIDL, and Raymond kind of give you distilled version of who can apply for PPP. There are a bunch of restrictions. For example, businesses that do lobbying cannot qualify for the EIDL. You know, there are some exceptions like that. I don't know that there's one for this type of business, but you know, certainly we can take a closer look at it if you know, if you reach out to us. Raymond, did you have anything to add about that?
Yeah, there was a follow-up question just to finalize that. That's correct. The PPP loan is calculated at 2.5 times. The EIDL loan is indeed unknown. The SBA has a magic formula there, and the grant is 10,000. But the SBA will be the determiner of the EIDL and of the grant.
Okay, excellent. And I think that's. Oh, okay. There's a question now. Will your firm direct us to a lender and work with that lender to see through the loans? So good question, and I don't know how much in depth we went into that, so it's actually a good opportunity to discuss that. So the EIDL loans, including the application for the grant, for the $10,000 grant, that does not go through a lender. Okay, that is, you can get professional assistance with that, but that is, the application is done directly with the SBA. Everything else that we talked about as far as the other loans does go through a lender. Now, as to your specific question, will your firm direct us to a lender? Yeah, look, you can, the choice of lender is yours. Okay, you get to choose the lender, by the way. And by the way, if you bank with a certain bank, you're not required to use that bank, right, Raymond? They can go to another bank for the PPP application. Right, am I correct? I just want to, right, okay. So yes, so what we would do is, if you choose to work through us as an agent, our firm, you know, we'll connect you, of course, and, you know, we'll work with that lender, but ultimately the loan is going through the bank, through the lender. That's for the PPP, but not the EIDL. EIDL that does not involve the bank.
And a follow-up to that, Paul, if I may, another question. Yes, there is a list of preferred lenders. That's on the SBA website.
Yeah. Okay. All right, and I think with that, I'm going to thank you so much for your time, Raymond, and thank you so much to everyone who attended and asked some excellent questions. This is not the end. You have our contact information, and you know, if you you know, if you have subsequent questions, please don't hesitate to reach out. And thanks again for everybody's time.
Have a wonderful day. Bye.
Take care. Bye.